This earnings call audio is presented to you by Alpha Street. Do visit us at www.alphastreet.com/India.
Ladies and gentlemen, good day and welcome to the Q3 and 9 months FY22 conference call of Electrosteel Castings Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and 0 on your touchtone phone. I would now like to hand the conference over to Mr. Anuj Sonpal from Valorum Advisors. Thank you, and over to you, sir.
Thank you. Good morning, everyone, and a very warm welcome to you all. My name is Anuj Sonpal from Valorum Advisors. We represent the investor relations of Electrosteel Castings Limited. On behalf of the company, I'd like to thank you all for participating in the company's earnings conference call for the third quarter and 9 months ended of financial year 2022. Before we begin, let me mention a short cautionary statement. Some of the statements made in today's Concall may be forward-looking in nature. Such forward-looking statements are subject to risks and uncertainties which could cause actual results to differ from those anticipated. Such statements are based on management's beliefs as well as assumptions made by and information currently available to management. Audiences are cautioned not to place any undue reliance on these forward-looking statements in making any investment decisions. The purpose of today's earnings call is purely to educate and bring awareness about the company's fundamental business and financial quarter under review. Now, let me introduce you to the management participating with us in today's earnings call and hand it over to them for opening remarks. We have with us Mr. Sivalai Senthilnathan, Vice President of Finance and Corporate Affairs, Mr. V.M. Sridharan, Senior General Manager of Finance, Mr. Nilesh Daga, General Manager of Accounts and Finance, and Mr. Gaurav Somani, Joint General Manager of Finance. Now I request Mr. Senthilnathan to give his opening remarks. Thank you, and over to you, sir.
Thank you, Mr. Anuj. Good morning, everybody. It is a pleasure to welcome you to this earnings conference call for third quarter and 9 months ended of financial year 2022. Firstly, I hope that everyone is keeping safe and well. Let me first take you through the financial performance for Q3 FY22 of our company on a standalone basis. Please note that these financials include that of both Electrosteel Castings operations as well as the operations of the three color pipes. The total income for the quarter was INR 1,406 crores, which is an increase of around 25% year-on-year. EBITDA reported was INR 195 crores and the EBITDA margin stood at about 14%. Net profit after tax reported was INR 95 crores, which is an increase of around 14% year-on-year, while the PAT margin percentage was about 6.77%. For the 9 months ended, it is important to note here that the numbers are not comparable on a year-on-year basis as the appointed date of amalgamation with the color pipes was 1st October 2020. The total income stood at INR 3,509 crores. Operating EBITDA stood at INR 484 crores. EBITDA margins were reported at about almost 14% and PAT stood at INR 203 crores while PAT margins were about almost 6%. Now coming to the operational highlights for the quarter, the production for the ductile line pipes for the quarter was 1,64,173 tons as against the production of 162,640 tons during the corresponding quarter of the previous year. As far as the color operations, the new blast furnace of 450 megawatt capacity has been commissioned, as you are aware, in the month of August, and along with additional facilities in ductile line pipe plant also commissioned. And with that commissioning of the new blast furnace, the capacity of DI pipe plant has been increased to 4 lakh tons per annum. The second phase of increasing the DI pipes capacity to 5 lakh tons per annum is underway. So this is how I would like to brief about the operation. And with this, I open the floor for the questions and answer session, and we welcome the participants to come out with the question.
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Mayur Liman from Profit Mart. Please go ahead.
Thank you for the opportunity. I just want to ask what is the quarter three operation highlights? Could you please repeat once again?
Yes. Hi. See, for quarter three, we have done a total revenue of 1016 crores. Our EBITDA was 153 crores and our PAT was 53 crores. In terms of volumes, we have sold around 165,000 tons of DI pipes.
Okay. And what is the outlook for the next quarter? How do you see the next quarter, and can you share your thoughts, please?
So generally in our industry, Q4 is considered as one of the best quarter because our supplies are to EPC contractors and government bodies, and the projects are state and central funded. So we expect Q4 to be a better quarter. There are some impacts of raw material price volatility, which we can see in coking coal. Coking coal prices have been kind of volatile. So we are not sure how it will behave, but otherwise Q4 looks reasonable.
Okay. And what is the capex plan for the next year, sir?
So as we have informed earlier, in our Tirupati unit, the southern unit, we are already planning a capex. We have already planned a capex of 3 lakh to 5 lakh tons. And out of that, 1 lakh ton has already been completed, which has commenced operations in August 2021. And the next phase for 4 lakh to 5 lakh tons is under way, which is expected to be completed by, say, end of the next financial year or maybe Q1 of FY24.
Okay. Thank you so much, sir.
Thank you.
Thank you. Before we take the next question, a reminder to the participants, if you wish to ask a question, please press star then one at this time. The next question is from the line of Saket Kapoor from Kapoor & Company. Please go ahead.
Yeah, namaskar sir, and thank you for the opportunity.
Namaskar, Saket.
Yes, sir. Sir, firstly, if you could throw some light on the current order books are in tonnage term along with the executable period.
So we have ordered around 375,000 tons, which is around say 6 months, and these are to be executed over the next 5 to 6 months time period.
Correct, sir. Sir, and there has been a lot of volatility in the raw material prices, whether iron ore, coking coal, coal. So if you could give some more color, how are we positioned? How is the company positioned to maintain its margin in this environment where the raw material prices are just mitigating the margins or lowering the margins of pipe players like us?
So, rightly said, there are two main raw materials for us. One is iron ore and second is coking coal. Iron ore has kind of stabilized. It was at peak in Q1, and from Q to Q3 it is kind of in a very narrow range. So iron ore is not volatile at the moment. Coking coal prices have gone up substantially in Q3 and Q4. It had come down for a brief period in Q3, but again has risen in Q4. So as a philosophy, our procurement team and our management has been carrying inventory of 4 months around for coking coal and iron ore. So we are kind of covered for our order book. We have clarity of our cost, and accordingly the order book is also in line with the inventory that we are having. Going forward, the coking coal prices were higher because of multiple factors. Australia is the main supplier for coking coal, and this period is a monsoon period. So the lines were disrupted, the supplies were disrupted. So we expect that going forward, it should normalize and the prices should cool off a bit.
Sir, we are procuring coal or are we procuring coking coal?
We are procuring coking coal.
Coking coal only, right. Sir, in the beginning, you gave the turnover of the entity and the EBITDA. Can you repeat that? That is for sir. Firstly, sir, we have this standalone numbers and also consolidated. As per our standalone 3 month number, the turnover is 1389 crores, whereas for the consolidated it is 1432 crores. So if you could explain to us what goes now into consolidation, is it the foreign subsidiaries business that gets clubbed into, if you could dwell deeper into it?
So I'll repeat the numbers again, Saket ji. In Q3, we have done a total turnover of 1400 crores. For the 9 months, we have done a total turnover of 3500 crores. For Q3, our EBITDA was 195 crores. And for full 9 months, our EBITDA was 484 crores. This standalone numbers includes numbers of Electrosteel Casting and Srikalahasti Pipes, which has now merged with Electrosteel Castings. And the consolidated numbers which are published, those numbers include the numbers of overseas subsidiaries. Our overseas subsidiaries which are more of marketing arms.
Correct, sir. Because I think that the contribution is partly 4 crore rupees on a top line of 44 crores. And
come again, sorry.
Sir, on a top line addition of 44 crores between the standalone and the consolidated, we have a bottom line increase of only 4 crore. So, what is the thought process of maintaining these? How strategically are these subsidiaries important for us? And going forward, out of the total sales mix, how much is export? And current order book also, sir, how much is dedicated to the domestic market and what percentage is towards export?
So, in totality, our export as of now is contributing around 25% of the volumes, of the total DI pipe volumes. And we have subsidiaries across the globe. And all the subsidiaries help us in selling our DI pipes in all the countries. Electrosteel Casting has been present in overseas markets since last more than 2 decades. And we have a very strong position and strong branding in Europe, Africa, Middle East, Singapore, everywhere, and US. So these subsidiaries have been doing business in these areas since long time. Since they are more of marketing arms, so margins are thin there, and that is why you don't see much of difference in the standalone and consolidated numbers. But ultimately, these subsidiaries help us in building the revenue in standalone entity.
Right, sir. Can you give us some more color on how the balance sheet is shaping up, sir, in terms of the debt numbers currently, and what are the current maturities for this year and the next financial year, and then I'll come in the queue.
So our net debt in December was around 1800 crores. And going forward, we expect that our long-term loans will reduce further. Maybe FY23 will not see much of reduction because we have some capex lined up. So our internal approvals will go in capex funding. But FY24 onwards, you will see higher debt reduction. We are at a comfortable position right now from earlier times.
And sir, and if you look at the gross debt number, sir, do you have that number also with you?
Gross debt is around 2250 crores.
22. And the breakup between the long-term debt and the working capital requirement out of
it will be more of 50-50. Long-term is around 1115 crores and short-term is around 1135 crores.
Okay. And the current maturity, sir, for the next 12 months?
Next 12 months, we have a payment of around 175 crores.
Okay, sir. I'll come in the queue. I have a couple of more questions. If I may ask, can I continue or sir, can I come in the queue, sir?
I have no problem, sir. You can ask.
Right, sir. Sir, what are our blended realization per ton, sir, for this quarter and for the 9 months?
Blended realizations for Q3 was around, I'm talking about domestic plus export, was around 59,000 rupees per.
59,000.
Yes.
Correct, sir. Right, sir. I'll come in the queue, sir. Thank you.
Thank you.
Thank you. A reminder to the participants, if you have a question, please press star then one. The next question is from the line of NM Modi, individual investor. Please go ahead.
Good afternoon, sir. Sir,
Good
so
afternoon,
my question is regarding this preceding 3 months and preceding 9 months figure which you have given in the result. That includes the result of Kalahasti also, no, sir?
Yes, sir, you're right.
Okay, sir. And sir, at what capacity our plant is running, sir, at the moment? Both the plants?
So both the plants are running at nearly around 95% capacity.
Okay, sir. Okay, sir. And sir, which are the raw material which we source from outside, and do we have any internal generation of any raw material, sir?
Sir, we procure coking coal outside India from Australia, and we have our own coke oven batteries. Our plant is fully integrated. We import coking coal and convert it to coke. We have sinter plant, we have power plant. So most of the power is met through our captive power plants, which generates power from waste heat gases. So our both plants are fully integrated.
Okay, sir. And iron ore we are sourcing total from the outside, no, sir? We don't have any mines in this company, no?
Yeah, we are sourcing from, for the eastern unit, we are sourcing from Odisha, and in Tirupati, we are sourcing from e-auction.
Right. Okay, sir. Thank you, sir. That's it.
Thank you.
Thank you. The next question is from the line of Rajesh B, an individual investor. Please go ahead.
Hello.
Yeah, Rajesh ji, thanks. Boliye.
Sir, good morning.
Good morning.
And congratulations for good results.
Thank you,
Sir,
sir.
going forward, what is going to be our profitability? Because what I can see is Electrosteel Casting, when merged with Srikalahasti, the profitability level has gone up. Hello.
So this is the benefit of the merger, and so there are a lot of synergies because both the companies were into same line of business, and the raw material and the finished products were same. So this made a lot of sense for us to go ahead with the merger, and hence the benefit has come in, which you are seeing. Also, the finance cost has come down substantially. Going forward, we are confident to maintain our margins. In fact, next year we'll see, full year we'll see the full capacity utilization of Srikalahasti at 4 lakh tons at the Kalahasti unit, because it get operation in August 2021. So next full year we'll see the full benefit coming in. So we are very positive for coming years.
Okay.
Sir, to add what Mr. Gaurav Somani said is, the purpose of merger is to increase the profitability, to achieve synergy, to take advantage of the merger. That is the purpose with which the merger is done, and it is being reflected now. This is the proof
that we can see in Q3. The profit.
Number one. Number two is, as he rightly pointed out in earlier question, we are having our capex plans. When the capex plans are put into operation, for example, the Srikalahasti pipe in the next year will be a full operational year of 4 lakh ton capacity. So all these, will certainly increase the profitability level. But then, we can't exactly tell because forward-looking numbers we are prohibited to give, and we cannot.
I can understand that. Understand that.
Yeah. Thank you. Thanks for appreciating.
I have few more questions. Sir, जो ईस्टर्न रीजन में अपना है इलेक्ट्रोस्टील कास्टिंग का ओरिजिनल प्लांट, at one time in the past it was probably one of the best plant, जो बाद में थोड़ा सा डिटोरिएट किया, लेकिन अभी श्रीकालाहस्ती ऐड हो जाने से the things will be far better now. तो मेरा ये पूछना था सर कि ईस्टर्न रीजन वाला जो प्लांट है अपनी पास्ट ग्लोरी पे कब तक आएगा?
Sir, Eastern Unit की जो plant है, which is in West Bengal, it has been operating at more than 95% capacity since last many years. And in fact, through various measures, through various debottlenecking measures, the capacities have increased. अगर आप पहले का data देखें तो sir, the plant was producing around 2,60,000, 2,50,000 tons, which now is at around 3,10,000, 3,20,000 tons.
Has put your call on hold. Please stay on the line. మీరు మాట్లాడుతున్న
Hello.
Yeah. Sir.
Sorry.
So yeah,
sir,
I can understand.
Yeah, capacity has gone up, and further, हम लोग ने sir काफी in last couple of years we have done lot of backward integrations to reduce our cost. For example, we have set up paint plant, we have set up additional fittings plant, we have set up silicon plant, ferrosilicon plant, we have increased the power capacity. So time to time various measures have been taken to reduce the cost, increase the productivity, increase the profitability of the company.
जी नहीं, जैसे श्रीकालाहस्ती में आपने 3 का 4 किया, 4 का 5 कर रहे हैं, उस तरह का कैपेसिटी इंक्रीज करना इधर में अपना कोई चांस है सर?
नहीं सर, यहाँ पे थोड़ा सा we have land issues. So what we are doing is we are increasing the capacity of value added products like DI fitting where margins are very high. उसका कैपेसिटी हमने सो वो हमने कैपेसिटी बिल्डअप किया है.
हाँ. तो और दूसरा, जैसे सर आपने बताया कि यूरोप में तो आपका इतना बड़ा सेटअप है एंड इलेक्ट्रोस्टील कास्टिंग एट वन टाइम हैड मोनोपोली. सिंस आई एम आल्सो विद इंजीनियरिंग बैकग्राउंड आई नो. तो इसमें यूरोप के अंदर में आपका जो एक्सपोर्ट्स अभी 25% होता है सर, ये 25% वैसे अगर देखें तो मेरे को कम लग रहा है, बिकॉज जैसा इलेक्ट्रोस्टील कास्टिंग का नाम है उसके हिसाब से तो इट शुड हैव गॉन टू मोर देन 50%.
So Rajesh ji, pre-merger, before merger, the export was contributing around 50% of the total volumes. And because Electrosteel was present into exports, all the branding and all the approvals are in the name of Electrosteel Castings. Kalahasti was focusing more on the domestic markets. Going forward, we have plans to increase exports from our Kalahasti unit also, and gradually the volumes will see moving up.
जी. तो आपका मार्जिन्स बेटर डोमेस्टिक में है सर या एक्सपोर्ट्स?
सर marginally it is better in exports.
इन एक्सपोर्ट. और मेनली इंडिया में आपके जो ऑर्डर्स है वो जल शक्ति मिशन से हैं सर अभी?
जी सर, अभी जितने भी ये प्रोजेक्ट्स चल रहे हैं, जल जीवन मिशन रूरल, जल जीवन मिशन अर्बन, उसी में से मैक्सिमम आ रहे हैं.
अच्छा, मैक्सिमम फ्रॉम दैट?
यस सर.
हाँ, बीच में सुनना था कि पीवीसी पाइप के साथ में आप लोगों का कंपटीशन होगा, बट देन पीवीसी पाइप तो अभी अप्रूव नहीं हुआ सर. इट इज ओनली डीआई पाइप फॉर द मेन पाइप.
So DI pipes is the most trusted, way for transportation of water because of the strength and everything.
100 साल से ज्यादा की लाइफ होती है उसकी.
Right sir, right. And PVC pipes cannot.
हाँ सर.
And PVC pipes cannot replace DI pipes because छोटे diameter में फिर भी PVC pipes थोड़े बहुत चल जाएंगे, but not in the mid and higher diameter pipes.
सर एक जमाने में तो इतना जबरदस्त.
I'm so sorry to interrupt. May I please request you to rejoin the queue for your follow-up as we have people waiting for the turn.
Okay.
Thank you. The next question is from the line of Anurag Patil from Roha Asset Managers. Please go ahead.
Thank you for the opportunity. Sir, firstly, can you clarify what is the total combined capacity of DI pipes now? Is it 7,25,000?
Yes, Anurag ji, it is around 7,20,000.
And what would DI
go up by another 1 lakh ton by say end of next financial year or early FY24.
And sir, what will be the DI fitting capacity combined?
DI fittings capacity is around 15,000 tons.
So it is not included in this 725, right?
No.
Okay. And sir, can you provide similar volume numbers for Q2 and Q1?
Q2 and Q1.
Yes, sir.
Just give me a moment.
Yeah, sure.
Is it fine if we come back to you on this data?
Yeah, sure, sir. And just one question. Earlier in ECL, we had some captive iron ore mines. So what is the status there currently?
So captive iron ore mine was allotted to the company, but it was not operational. We were waiting for some clearances to come in, which are still pending. So mine was not operational.
Okay, okay. So any possibility in the near future that these can become operational?
So we are still in discussions with the government, but we cannot say much on it.
Okay, sir. And sir, in terms of EPC players, there has been some delays in order booking due to volatility in steel prices. So has the situation improved?
So for us, we are, catering to some of the large names like L&T, NCC, Mega Engineering. And for us, the position is comfortable only. We are not seeing any issues in terms of orders because there is a lot of push from both the state government and the central government. So we don't see any challenges there.
Okay. Thank you very much.
Thank you.
Thank you. The next question is from the line of Ankit Mishra from Wallford Research. Please go ahead.
Yeah, my name is Anik Mitra. Good morning, sir, and congratulations for good set of numbers. Am I audible?
Yeah, good morning, Anikji. Please carry on.
Yeah, thank you, sir. Sir, I have a question. Like you told that, like around 60, just a moment, you told a particular number that around 59,000 ton was your 59,000 rupees was the realization in the DI pipes, right, sir?
Right.
Okay. So, is it the total realization of the company for the DI pipes? Means is it the blended number?
No, this is for DI pipe. This is not including GST.
Okay. And sir, in terms of DI pipes volume, what is the contribution of government project?
So all the projects are government projects only, Anikji, because DI pipes are ultimately sourced by government only. So it is either sourced by them directly or through projects, through EPC contractors.
So, sir, these are mostly like those related to Jal Jeevan Mission, right, sir?
Right.
So, sir, 2024 is the target period of time by which government is likely to finish it off, like this Jal Jeevan Mission, if I'm not wrong.
Right.
So, sir, what is your focus post 2024?
So, Anikji, this Jal Jeevan Mission started in 2018-19, somewhere around 2018-19. Before that, also there was a lot of focus from the government in providing drinking water to each and every household. These are more of dedicated projects. So going forward also we will have government push both from the state and the central for supply of drinking water to each and every household. At the moment, since many households are not connected, that is why the government has come up with a dedicated project.
Okay. Okay, understood, sir. Thank you so much. That was my question, sir. Thank you so much.
Thank you. A reminder to the participants, if you wish to ask a question, please press star then one. The next question is from the line of Vipul Shah, an individual investor. Please go ahead.
Hi, sir. Congratulations first for hosting this call, and I hope this practice is you will hold the call every time after the right?
Yes, sir.
Yeah. So my first question is regarding your note number 4, where you have written off this investment of around 1,500 crores in Electrosteel. So can you throw some light on this? So any amount of this investment is recoverable or?
So this is an old matter. This electrosteel
but since I am not seized of it, if you can elaborate, it will be very helpful, sir.
Yes. So Electrosteel Steel was promoted by Electrosteel Castings Limited. It's a greenfield project which ran into problems and ultimately went into IBC and was taken over by Vedanta.
Right.
So the equity investment that Electrosteel Castings had in Electrosteel Steels, since it went to Vedanta, it was written off in our books. So this is not recoverable.
This is not recoverable. Okay.
But yeah, so this was more of a book entry because the investments were made long time back. So this is more of a book entry and it was done in 2018-19.
And this call block development charges of 1,500 crores?
So we had a coking coal block which got deallocated in 2014. And so the investments we have made a claim for it. And the matter is in High Court, Delhi High Court. But due to COVID, there is not significant progress. And we are still waiting for that compensation to come in.
So what is the amount which we have claimed and have we got any compensation whatsoever, sir?
Our claim is of 1,500 crores. That is the total amount that we have spent on development of the mine. And the matter is still under discussion. We have submitted all the papers and all the required documents. But unfortunately it is taking little time.
We have not got any compensation whatsoever?
We got a very nominal compensation in 2015-16.
Okay, sir. And regarding your raw material cost, this coking coal constitutes how much as a percentage of revenue?
So coking coal cost as percentage of realization, if you are talking about, it would be around say kind of 20-25%.
20-25%. That we are so it is 100% imported, right?
Yes, 100% imported.
Okay, so any volatility in the prices, so are we able to pass on it to the end consumer, or is it passed on with some time limit? So how it works?
So it is passed on to the end customers, but it definitely happens with a time lag of maybe 2 to 3 months time.
2 to 3 months time. Okay, sir. And you said your pipe capacity you are increasing by 1 lakh tons. So what will be the total capex for that?
Mr. Sridharan, you would like to answer this?
Yeah, for that 1 lakh, it would be around 350 crores.
350 crores. And how much we have spent out of 350 crores till date?
No, you are talking about the 1 lakh that we are going to add, no, from 4 lakh to 5 lakh?
Yeah, so it is at a planning stage right now?
Yes, in the very initial stage.
And sir, you said about that this margin for fittings is higher. So what percentage of our volume comes from fittings, and what is can you quantify how high is the margin in the fittings, please?
So sir, DI fittings contributes around 5 to 6% of the total turnover. So the volumes are less here, but margins are pretty high compared to DI pipes. I will not be able to give you the exact number, but it's higher than what we make in DI pipes.
So what will be the volume of DI fittings 2 to 3 years down the line? Can we assume that it will reach 10% of the volume?
10% of the total turnover? No, it will not be that high. It will be around this range only.
It will be around this range only.
Yes.
And since lastly, sir, since you mentioned that the end user of ductile pipe is government. So are you facing any problems in the receiving the payments from government, or EPC contractors also may be getting their final payment from government and government bodies only?
No, in fact, our receivables are very much on time. We have not seen any delay. And even in the COVID period, realizations were happening very much in a normal manner. Because as I have been mentioning earlier, these projects are funded by state and central government and has lot of importance for the government. So there is no slowdown and there's lot of push. So realizations are happening very much on time.
Mr. Vipul
You pay on 1,800 crores of...
for your follow-up as we have people waiting for their turn. Before we take the next question, a reminder to the participants to please limit your question to 2 per participant only. You may rejoin the question queue if you have a follow-up. The next question is from the line of Sudarshan from Danseri Ventures. Please go ahead.
Good morning, team. Thank you for the opportunity. There are 2 questions from my side. As you guys have maintained that you guys are confident on maintaining the margins going forward also, I just wanted to understand that what drives this confidence, because in the current environment of so much volatility in coking coal and other raw materials like iron ore also, all these have stabilized a bit. So what gives us the confidence that we'll be able to maintain margins? If you could just add some color on this. I have one more question, I'll come back.
So generally, if you see our past performance, our margins are typically in a range. So maybe say 14 to 16%, 14 to 17%. When the raw material prices goes up for a quarter, maybe the EBITDA margins comes down to 14, 15%. And if the raw material prices goes down, we tend up to make around say 17, 18% for a quarter. On a longer period, if you see, if you ignore quarterly performance, for a longer period, for the full year, you will see that we have a very stable margins because we normally pass on the cost of raw materials to our end customers. And as I said, it happens with a time lag of maybe around 2-3 months. So hence, this is why I was saying that we are confident of maintaining our margins.
Karavji, just one follow-up on this. Do you think that measuring margins in this business, so is the percentage number more relevant or EBITDA per ton is a better metric?
EBITDA per ton is more relevant.
So can you just tell me, so as you mentioned that between 14 to 17 is your longer term range, what's your EBITDA per ton longer term range, and do you have like identified levers to improve that?
So for a safer side, you can assume that 10,000 rupees of EBITDA, blended EBITDA per ton is reasonable, plus minus 500 rupees per ton. That you can assume. And so, we are present into export market. Our focus is into exports, where margins are slightly better domestic. And now we have additional capacities, and we can definitely increase our exports, which will, contribute higher EBITDA.
So expanding export book is one of the identified levers to expand your EBITDA per ton, right?
Right. And but we have done a lot of other activities which I mentioned in my earlier replies.
Yes, I heard that. So I just wanted to know that if there is a number in your mind that let's say current 10,000 per ton EBITDA per ton, you are gunning for XYZ number over 2 3.
I request our investor friends, please don't ask some of the very, very classified and confidential information, sir. On a percentage basis we can give, but not, exactly and all. I hope, we have competitors also. So I request please to restrict, sir. Please understand our position also.
Fair enough. Okay, sir, no problem. Another question I have is on the order book. So as you said that the order book is good for next 6 months odd, and based on my reading on different companies, I learned that many of these government funded projects got diverted in last year because of COVID and a lot of money was spent elsewhere. Could you give me just one color that this 6 months order book, is this the nature of the business that you always have like short tenure order books, or what is the traction you see on the order book? How can I gauge the order book, velocity?
No. So, sir, actually, the order book, what we have in terms of number, what Mr. Gaurav told is we have about 6 months order. But the 6 months order is executable from 0 months to 6 months, 8 months also. So what happened is, today 6 months, these orders will be executed, fresh orders will be coming. Then those orders will be executed, fresh orders will be coming. It is something like that.
Yeah, I understood. So that it's continuously replenishing. So I'm just trying to understand. I'm new to the industry. That is this the nature that we always have 6-7 months order, or?
No, it all depends. See, what we do is, as Gaurav said, orders are not. There is no dearth of orders. But when we pick up the orders, we also ensure that the realizations are proper. It really makes sense to take a particular order. For example, now in our Kalahasti unit will take orders of South, and our Kolkata unit takes order of, North and the East. Like that, we pick and choose the orders, and we also ensure good realization. If the realization is not good, we don't pick it up because we are not having any dearth of order, and 6 months to 8 months order book is, I feel, is sufficient for the industry. And another thing I want to tell all the investors here, that we are on an oligopoly situation. There are about 6-7 players of the DI pipe in India, and any coking coal price, anything will have a similar impact. May not be for 2 months, but later. So whenever there is a price increase or something like that, it could be generally passed on to the people, to the customers. Yes, sir, you can proceed.
That's interesting, sir. That's interesting. Okay, for the moment I'm done. Thank you.
Okay, next.
Thank you. The next question is from the line of Sahil Sanghvi from Monarch Network. Please go ahead.
Yeah, good morning and congratulations for excellent results. I have 2 questions. So first question is the realizations of rupees 59,000 that one of the participants quoted for Q3. Can you give me the similar number for Q2 and maybe year-on-year number, like for Q3 FY21, what was the realization?
For Q2, I don't have the number handy, Sahilji. But last year, year-on-year, if you see, this number has gone up, maybe by around 15%.
Okay. And currently the orders that you're booking up, are they in a similar range, 59,000-60,000, or are they still higher? Because I see the reason is one of your competitor has said that there is a deficit in supply of DI pipes right now, which is kind of letting the realizations to go higher. So I'm just trying to understand, is the pricing still rising from these levels?
So because of the increase in coking coal prices, the realizations are high. The new orders are coming at slightly higher realizations.
Okay. Even from this level, from the 59,000 per ton level?
Yes.
Okay. And my second question would be, which are some of the states that are very active on the order front, where you're getting these orders coming from?
So it's almost from all the states. Mr. Sridharan, if you would like to answer.
Yeah. Traditionally, sir, South we have good amount of order. Orissa has started this Jal Mission. Orissa we have a good amount of order. And similarly, in the eastern part, we have a good amount of orders. Gujarat is also now are giving good orders, sir. To, say mainly. Of course, apart from that, we get in all other states like Kerala, Karnataka and all. But these are the main contributories to our orders, sir.
Right. Got it. Fine. Thank you. All the best.
Thank you.
Thank you. The next question is from the line of Rajesh V, an individual investor. Please go ahead.
Yeah, sir. Thank you for giving me opportunity once again. Sir, you said you pass on the increase in price with time lag. That means not in the current order, but the next orders which you get.
No. I will tell you, sir. I will explain you. See, as I told, there are about 6, 7, 8 manufacturers in DI pipe. Okay.
Correct, sir.
Now we have some small amount of order where we can increase the price depending on the PGRN and based on the cost of living index. Okay. Now, for example, sir, if the cost of coking coal prices, which is a very important raw material, goes up, it will affect all the existing manufacturers. Okay. And the majority of our supplies are through EPC contractors. We never supply directly to the government. So we explain the problem to the EPC contractors, and the problem which I face will also be faced by my other competitors. So, I mean, they understand the position, and, we are, confident of getting, if there is any increase in the cost, it will be passed on to the customers.
Do you mean to say there is PVC clause in the order?
Some of the very few of the things there is a PV clause, and where it is not there, we explain the position, and it is generally given.
Do they give? Companies like L&T, NCC, do they agree to give?
Yes, if there is a price increase for everyone, they have to give, after all.
Okay, normally because if there is no clause in the order, contract, now normally people don't give.
No, I will tell you, sir, if there is a small increase of 5-10%, increase or decrease, it is okay. But if there is if the increase is very, very phenomenal, which everybody knows. You see, today coking coal prices, iron ore. Everybody knows. And they also know at what margins we operate, what is the thing. And generally, see, it is like this, sir. I mean, both Electrosteel Castings and Srikalahasti pipe. Now I am referring all our companies as ECL. ECL is the forerunner in the DI pipe. We are the number one manufacturer in terms of age, in terms of quality, in terms of not all these, by dedicated customers. We have dedicated customers like NCC. We have dedicated customers like L&T. We understand their problem. They understand our problem, and they are certainly to give the price increase wherever there is a phenomenal increase in the raw material, whether the PV clause is there or not.
Thank you. The next question is from the line of Urvija Shah from Asia Securities. Please go ahead.
Hello.
Yes, madam. Go ahead, madam.
Please go ahead.
Okay, yes. Sir, congratulations first of all on a good set of numbers. Sir, I wanted to understand a couple of things. We are an integrated player, and almost I think since few quarters we have Kalahasti also integrated with us. So, sir, compared with other players who are not completely integrated, our margins are almost similar. So, sir, how do we take the benefit of being an integrated player? What are the measures that you are taking for cost improvement from here on?
Madam, as our Mr. Gaurav Somani said, we strongly believe in forward and backward integrations. Okay. So here, for example, we have started originally, our Kalahasti and Electrosteel had only the furnace and the ductile line pipe plant. From there, we went to coking coal to coke conversion, power plant, ferroalloys plant, like that, so on and so forth. So, and now we are also, put up some, we have taken over one power plant in our Kalahasti division, which also we have put into operation. So these, measures helps us in, integration and also the cost control or reduction of cost. That is how we achieve the cost reduction, madam.
So, what going forward, sir? Can you quantify how much improvement we can see, and when it will come when it will reflect in the numbers?
It has already started reflecting. For example, in Kalahasti, the 4 lakh tons capacity increase. It will start. The full year operation will happen in 22-23, and the savings on account of power and other things will full year it will be operated next year. I mean, it will be visible next year. Everywhere for that matter. And we in Electrosteel Casting Group believe that cost reduction and cost control is not for one day. It is a continuous process. It is our breadwinner. We have to do every day, every time, every minute the cost control. So whatever profits or whatever we declare, each and every paisa, the cost control measures taken by us is reflected.
Sir, I was looking for a broad quantification of the number, but I mean, it's fine. Sir, another point from a shareholder's point of view is that we are still trading below the book value. So, can you elaborate how can we, what measures can we take to unlock shareholders' value, sir?
Madam, one is, we executives, we senior executives at the company level, we continuously take necessary efforts to increase the profitability, to increase the production, to reduce the cost, and increase the shareholders' value of the company. But market, madam, it depends on so many things, some US, thing goes up, some reduction goes, some political development takes place. These are, the contribution for the share value is not only the operation. There are so many things which are taking place which are beyond our control, madam. We strongly believe that we should give a very good profitable operations to the company. We should give good dividends. That is our motto, madam. There are so many uncontrollable factors which is, determining the market share prices, which, we do not have a control. All you people only have to tell us, madam. I hope all my other colleagues will agree to this. We strongly believe in making profit for the company, making value for the shareholders.
So what kind of dividend policy do we want to follow?
Well, we don't have a dividend policy as such written, but it is dependent, and this is the board's prerogative where we can talk now, madam, anything.
Sir, I was looking for numbers in all the questions, so it would have been great, but I think we can discuss it offline maybe.
The numbers are already given, madam. We have given you what is our orders on hand. We have given you what is the EBITDA, what is the EBITDA percentage, realization percent. Every numbers have been given. If you want me to tell me what will be the profit for the year 22, 21,
no,
22,
sir, I am numbers in the sense is I was in the with regard to the dividend policy, sir. It was in follow-up to my question. But anyways, thank you, sir, for answering.
Thanks a lot, madam. I hope you understand.
Just to add to what Mr. Sriharan said on the dividend policy, see, this will be taken up once the annual accounts are over, annual profits are arrived. And as you are aware that in the color SC pipes, it used to be around 60%. And similarly, once this financial year is over, the board will take cognizance of all the matters, including the capex and other requirements of the funds, and the appropriate decision would be taken. So we can see that once the year end is over and the results are presented to the board, then we will come out. So this is the first year after the amalgamation, so hope that we can get the information.
So sir, capex is 350 crores on the drawing board stage, and apart from that, is there any maintenance capex or any other capex we are looking at for next year?
No, that is all regular. That is all, factored, I would say. So this is for the expansion. This also answers your question, adding to the shareholder value in terms of, increasing the capacity. And as we have been telling, various measures are taken to improve our EBITDA and PAT level, so that you will see both, increase in the profit ability and also the sustainability or improving the quantum of the profit.
Okay, thank you. All the best, sir. Hope you continue with these calls, and also, sir, a small investor communication in the form of a presentation is also another way of generating shareholder, being engaging with the community. Since you have asked for it, this is my one feedback I would like to give, that you can engage with quarterly presentations as well. I think it was a regular feature in Sri Pipes.
Here also, I mean,
Certainly, madam.
We
will take your suggestion and we will try to implement, madam. Thanks a lot.
Yeah.
Thank you. The next question is from the line of Sahil Sant from Monarch Network. Please go ahead.
Yeah, thank you for the opportunity again. My question is regarding to the coke consumption that we have. So, do we have full captive coke production right now through coke ovens, or we buy it from the market also?
We have we have the full capacity, so we are not buying any coke from outside. In fact, we at times sell our surplus coke in the market.
Okay. And so with regards to the coking coal cost, so what would have been the average cost of coking coal in Q3?
Q3 average was around 15,000 rupees.
Okay. So how much is this expected to go high in the next quarter in terms of maybe any inventory you have, or because the imported prices have gone very high. So that's the reason I'm just trying to understand on the cost implications.
You're right. Imported prices have gone up. In fact, last 1 month, the coking coal prices have gone up substantially. So maybe we'll see 3,000-4,000 rupees jump in the coking coal prices.
Okay. And then probably you'll have to do a new set of buying, right? That's the inventory you had.
Yes.
Okay, so this will last for another quarter, or you can go for 2 quarters with this inventory?
No, for a quarter.
Okay, fine. Thank you so much. Thank you.
Thank you. Thank you very much. Ladies and gentlemen, that was the last question for today. I would now like to hand the conference over to the management from Electrosteel Castings Limited for their closing comments. Thank you, and over to you all.
Thanks a lot. Thank you all, and we will continue to have this conference calls going forward. And thank you for your feedback and the active participation. And I request all of you to stay safe and healthy. Thank you all. Thank you, Anuj, and for conducting this conference wonderfully. Thank you all.
Thanks. Thank you very much. Thank you very much. On behalf of Electrosteel Castings Limited, that concludes this conference. Thank you all for joining. You may now disconnect your.
Thanks for listening to this earnings call presented to you by Alpha Street. Now don't forget to subscribe and press the bell icon for notifications. Do also visit us at www.alphastreet.com/India.